Good evening, traders. This is Trader Day for TradeHacking.com on October 20th, 2015. Wanted to start off just talking a little bit about the markets today. IBM really hit the bed today, down over 6%. That's a Dow component. But Apple was up with an announcement that their Apple TV was going to be coming out next week. So if you've been waiting for that, then today's your day for good news. The market ended up down 13.43 points today. It was really mixed. But one thing that I wanted to talk about was an extension of yesterday's conversation, where you take a look at these fib extensions. We had talked about the 61.8% as being a very, very critical juncture here in the market. So if it's going to go up, we're probably going to see this thing go up to 17,600 and change. If not, this is going to be what brings the precipice of this back to the downside. So we're at a very critical juncture here. We've got very mixed earnings season at best. A lot of companies, Morgan Stanley, JP Morgan, all these companies are not doing so great as far as earnings, but I guess we'll see how the rest of earnings seasons go. You can also see that from a non-trending standpoint, if you just wanted to take a look at this area right here, where it's kind of in a range of around 16,000 to 17,200. Well, now we're here towards the top of there, over here, so we could possibly see some action to the downside. The MACD showing that the momentum's to the weaker hands as well, so we'll see what's going on with that. We just ran our proprietary algorithm to see our buys and our sells for tomorrow. I'm actually going to go through them in real time. I have not looked at them, so we'll look at them all together. Let's see, the first one is the ProShares Ultra Silver Fund. I don't have a lot of interest in this. These are all buy signals, but it doesn't take into effect where the moving averages are. So this is the 50 moving average, and this is the 200. Since we've already seen this thing, obviously, is in a downtrend. I don't have a lot of interest in trying to buy in a downtrend, so I'm going to skip on that one. The next one looks like it's Akami Technologies. This is one that I might take a look at. It's not going to be tomorrow, but it's definitely something I can put on a watch list. Reason why is that right in here, it's still showing that there might be some further downside. You never know, it could do something like this right here, where it just pops up from the middle of this oscillator up to the upside. But I want to buy when I'm showing a buy signal and we're writing down in here and coming up, not from the top down. So I'm going to write that down, but not look to trade it tomorrow. Next one is British Petroleum. Well, you can see there's a death cross right here. Not a lot of interest in a long. We're at a double top here as well, and the trend is obviously down. I'm not a big bull on energy right now anyway. Next one is this Cognizant Technology Solutions. This is one where it's almost like a Akami, where you've got this right in the middle juncture right there. So I don't have a lot of interest in that one right now, but I will definitely put that on the watch list. Dish Networks. Well, you can see that this long-term moving average up here and those moving averages are pointing down, and you can also see that the momentum's down. And then right in here, you've got the stochastic still on down. If we were to straighten this out a little bit more and widen it out, you'll probably see it's in a big downtrend. Well, there you go. So it's down almost 30 some odd %. Not looking to try and catch the bottom on something like that. Next one is Fleur Corporation. Same situation here. You've got the momentum actually coming down here. This could be a pause point in a uptrend or a downtrend. This could be an ABC up or the beginnings of an ABC down forming. So not a lot of interest in that. Next one's Goodyear Tire and Rubber. Might have a little bit of interest in this, except for we're up here at the top on the stochastics. Really don't want to be buying into that type of strength and momentum. I'd rather be catching a good entry point and then riding the wave, as they say. This is Amaretta Hess Corporation. Moving averages are down, stochastics at the top. Momentum on the MACD is actually going down as well. Kinder Morgan, same situation. Not a lot of interest in that. Actually, when I go to the next set of stocks, I'm going to be looking right in here first, because if it's not down here at the bottom or towards the bottom and coming out, there's not a lot of interest on my end to do anything with it. 3M Corporation, a Dow component, no interest in that. Moving averages are down, and the stochastics are going down, so it looks like that wave might be over. Same thing here with the market vectors oil services ETF. And then we have two more. Phillips 66. You can see that there's a lot of buy signals here in the energy sector, which is kind of interesting. So it'll be one of those things where we might want to watch the oil and see if there's a lead on oil or unleaded gasoline futures. Same situation here. Stochastics are up at the top. Momentum's coming down. However, this is a little bit different. There is no death cross to the downside. The momentum's up to the upside. So if we can get this thing to level out here, and maybe show some green bars for upside momentum, and then get this thing down towards the bottom, maybe we could take a bounce off here off the moving average and see if that's got any legs to it. Last one is Union Pacific. I actually made money earlier this year by doing puts on, or actually selling a call spread on Union Pacific. As soon as they got into it, it just completely tanked. I'm going to actually stretch out this chart just to show you how much damage has been done with this. I have no interest in this because the moving averages are crossed over to the negative side. The stochastics is still going down. Momentum's actually on the MACD is actually negative as well. You can see this thing's lost about 25% of its value. Actually, if you go from this top down to this bottom, it's probably the August 24th shenanigans of that flash crash. That's about 33%. So it's down quite a bit, and I'm not looking to catch a falling knife on any of this stuff. Let's take a look at some of the sells. So it looks like healthcare is back in the sell zone again as I look at the list of stocks. I know that you can't see it because I want to make sure that the charts are clear. I'm not interested in this short or sell because the stochastics is going up and it hasn't topped out. You can see where it is right in here, and it just kind of kept going up. If this crosses over and goes up, I really don't want to be short something where it's going to be doing nothing or having time decay on my options. So let's see, next one is Ambarella. So this is one that I would be interested in because of the death cross here, but I want it to come up a little bit and recover. I want to see the stochastics come up on that, so no trade on that. Amgen. So this is a trade that I'm actually interested in. We've got the death cross that's sitting right there, and we have a good signal right here of a sell. This to me is a great double top where it has a higher high, but you can see the oscillator has a lower low, and this has a lower low as well. So I'm very interested in either a short or a put spread on Amgen. AstraZeneca. So it's kind of interesting here. Here we go with the biopharmaceuticals and the healthcare stocks again. I don't like to play gaps like this. It's already crossed over. You're already around halfway down the oscillator. It would have been great to get a signal right here, but we didn't. So it was down 4% already. It's one of those things where you get something like that where you short right in here. You get something like that, you just kind of cover. You make a good 3.5% for the day. Bed Bath & Beyond. Stochastics, I don't like where they're at, so I'm not interested in that right now. Biogen, same situation with the stochastics. Celgene, notice all the names, right? Notice all these names. Biotechnology. So that means the IBB might be in trouble as well. So we'll take a look at that as well. This one I'm very interested in. Here's your death cross that's starting to set up. So Amgen and Celgene I've definitely got written down. Capital One Financial. Not a lot of interest in this. Got the stochastics down there in no man's land. Community Health Systems, no interest. Stochastics is going up. This might be a rebound play, but not right now. Gilead Sciences, kind got some interest in this. We've got a death cross right here. You got the stochastics at the top. You got the MACD rolling over. So I'm going to put that on my notepad as well. Once I find it, there's a notepad. So we've got Amgen, Celgene, Gilead so far. Herbalife, not touching this one. This is Atkins and Carl Icahn's little battle that they can have. No interest in that at all. Intercept Pharmaceuticals. I'd like to see the stochastics a little bit higher, especially, get a good double top at that. I don't consider that really the best double top. Isis Pharmaceuticals, this one I do have some interest in. It's already down 6.26% for the day. That's quite a bit. It probably will visit this low around 37.38, but I'd rather not get into something after it's made a very huge move like that. Intuitive Surgical, stochastics are still going up. I think this stock actually could go up a little bit more, but here's the death cross. So I think that's a very important thing for everybody to kind of look at. There's a death cross here on a lot of these biotech stocks. El Pollo Holdings, I guess they own those chicken stores, El Pollo Locos. No real interest in this. It's an $11.80 stock. I guess if you really wanted to short this thing or you wanted to sell a call spread, you could do that. I don't have any interest in it. Click Technologies. This one looks like it's all over the place. I'm sure the volatility on this is going to be all over the board. With the moving average, long-term moving average being down there and that one up here, my assumption is that this has been in an uptrend and it'll probably continue to do so. So let's kind of widen out on this and see if we're kind of right. Yeah, so there's an uptrend right there. Obviously, it's just kind of become extremely volatile lately. Not sure why. I look at charts, I don't read news. Let's take a look at this. Rackspace Hosting. Stochastics is jacked up for me. I'm not going to play that, especially since I've got 3 other plays right now I can take a look at. Moving averages are up, so Regeneron Pharmaceuticals, my assumption is if we zoom out on this, we're going to see an uptrend on it. And there's your uptrend. So right now, that's just kind of, it's the stock finding itself. Shire PLC. Could see some interest here, but I would really like to see the stochastic get up here at the top and both lines above the 80 and roll over. So I'll take a look at that in a couple of days. Splunk. So again, we have the death cross, but I would like to see the stochastics get up and make a definite move. Now what makes this interesting is that the MACD right here almost looks like it double topped. I mean, this is definitely a higher high than this little peak and valley right there, and they're pretty close, so that's something that you can actually take a look at. I'd rather, again, we've got some good candidates. I would rather stay away. This is a Select Healthcare Spider Fund, so imagine that. We got all these biotechs and these healthcare companies, and then we've got the major ETF for it that's showing a sell. I have some interest in this as well. I actually like these better than individual stocks, only because I'd rather take a risk on the sector and the basket than having one of these companies have me be short and have a company come out with some new wonder drug that cures baldness or obesity or anything like that. So I'm going to put the XLV here on my notepad. XLV. And then Yum Brands. Zero interest. Stochastics in the MACD. So it looks like it had some, the earnings came out, or I think they actually made some announcement yesterday of some sort of partnership, but if it was earnings, it opened higher and obviously closed at the bottom. That's never good. Let's take a look at IBB, which is the NASDAQ Biotech ETF. Yeah, this thing's kind of starting to roll over here. You can see it starting to roll over here. If I was to actually play this, I wouldn't do that, only because of the fact that I would want to see the stochastics up. I've got enough plays right here, right now. So I've got Amgen I can take a look at, and then I've got Celgene I can take a look at, I can take a look at Gilead as well. But my biggest interest is going to be probably, well, it's probably going to be in Gilead and the ETF, the XLV. I've played Amgen before. It's kind of a crazy stock. Just when you think you've got it figured out, it figures you out. So I do like this double top though, so I'm going to take a look at that a little bit more in detail. I will have some trading suggestions in the morning, but if we were taking a look at Amgen, what I'm going to start researching is a 160 put, 155 put. I would be buying the 160s and selling the 155s. Want us to get something that's in the money, and then make the money on the time decay on the at the money. So that's something that I would want to do. If I was going to sell calls against this, I would do like a 150. I'm sorry, it's at 150. So I'm going to look at a 155 by 150 put spread. If I was going to sell calls, I would sell the 150 calls and buy the 152 and a halves or 153s if they had them, like 3 or 4 weeks out. For Celgene, I'm going to take a look at probably the 120 puts and the 115 spread right there. That should help offset a lot of the cost on something like that. So I'll have a little bit more guidance on what I'm going to look to do tomorrow as well, but these are things that you can start looking at tonight. For Gilead, I'd be doing the 105 puts. I'd be buying those and selling the 100s. And then I'm really gung-ho on this one. I would probably, especially since it's actually hit this moving average and it seems like it's failed, I would be either selling the 70 calls and buying the 72 calls from like 2 or 3 weeks out in a diagonal spread, 2 weeks out, 3 weeks out, or I would be purchasing a put spread where I would be buying the 70s or maybe even the 72s if they had them, and then selling the 69s or the 68s against that. So that's the update for the 20th. A good trading tomorrow. I will update people if I get filled on anything. And great trading to everybody.